It's Nick here from Option Infinity. I'm talking about the Snowflake IPO today on September 16th, 2020. Disclaimer, everything discussed here is for educational purposes only. Do your own research, obviously. What is an initial public offering? An initial public offering, or an IPO, is a process that a private company takes to offer shares to the public for the first time in a new stock issuance. And there are two other ways that a private company can go public, which are via a special purpose acquisition company, a SPAC, as well as a direct listing. An IPO allows a private company to raise capital from private investors. A private company must meet requirements established by both the Securities Exchange Commission as well as the exchanges to hold an IPO. A private company hires an investment bank to ascertain demand for shares as well as to market the IPO to other investors. The investment bank is also responsible for setting the IPO price and date. IPOs afford companies with an opportunity to raise capital by selling shares to the public, which improves a company's ability to grow. Company founders and early investors typically use IPOs as an exit strategy to realize a profit. So as you can see in the diagram below, a corporation gives their stock to an investment bank, who then sells it to the public. The public then gives cash to the investment bank, which goes back to the corporation. Now, what to know about Snowflake IPO? Snowflake was founded in 2012 and is a cloud-based data warehousing company based in San Mateo, California. Their service allows users to store, discover, securely share, and analyze data using cloud-based hardware and software. The IPO date is today, September 16th, 2020. They intend to sell at least 28 million shares priced at $120 per share. This would value the company at nearly $34 billion and will allow them to raise $3.4 billion in cash approximately. Berkshire Hathaway and Salesforce Ventures have each committed to purchasing $250 million worth of stock. Berkshire Hathaway has also agreed to purchase 4 million and change shares from an existing shareholder at the IPO price in a secondary transaction that will close with the main offering. Snowflake raised $479 million in their Series G funding round back in February of 2020, which valued them at around $12 billion, which is interesting because right now they're worth around $34 billion at the current IPO pricing, which means they've increased in value by about $22 billion over the last roughly 7 months or so. Annualized revenues should come in at around $500 million for Snowflake, which results in quite a high price to sales ratio of 68. The average software as a service business has a price to sales ratio of between 10 and 20. And the company is currently losing approximately $350 million annually, right? So they're operating at a loss. I had a tech analyst from Canada named Paul Johnson do an analysis on Snowflake, and here's his report. What is Snowflake? It's an integrated storage and compute platform for data analysis. What are its strengths? Well, firstly, there's a low barrier to entry for customers as there is no hardware or software to purchase and set up. Customers can use as much or as little as they want, and they only pay for what they use. There is no data movement required whatsoever, whereas the traditional approach has been that data storage and computations have been performed on separate platforms. This results in vastly superior performance as data does not have to move from storage to compute to perform calculations. And Snowflake is a Swiss Army knife of data. Often when you're using data for analytics, customers must store data in multiple intermediary tools, such as a data warehouse or a data lake. The primary advantage of using Snowflake is that it can be configured to be all tools in one, which benefits both cost and efficiency for customers. Industry analysis. Snowflake is leading the market in innovation. However, there are many large competitors that will eventually offer similar services, making it a commoditized product. It is likely that Snowflake is eventually acquired by one of the big players. This is from the tech analyst perspective, not my own. Key competitors are Google BigQuery, Amazon Redshift, Microsoft Azure Data Warehouse and Azure Databricks, IBM Netezza, Oracle Extended Cloud. And the final thoughts are that conversion to Snowflake is not simple and a lot of work is required, which requires significant organizational resources. For most organizations, the approach will be for their current vendors to catch up with tools to migrate their existing customers to the new technology. The bottom line is, unless you have a very specific business challenge that your current tools won't satisfy, wait for your current tools to evolve. The risk factors outlined in their prospectus and their SEC filing, which can be found in the link below at the bottom of the page, are over here. I would suggest reading them if you are going to be investing in the business, as these are important to understand. Obviously, if you want to pause the video and look at these right now, you can do that as well. But I suggest reading the prospectus if you are going to be investing in Snowflake, because the valuation is quite rich right now, given the price to sales ratio. And also, this was kind of a red flag that I saw in their prospectus as well, the implications of being an emerging growth company. They stated that we are an emerging growth company as defined in the Jumpstart Our Business Startups Act of 2012 from the Jobs Act. We may take advantage of certain exemptions from various public company reporting requirements, including not being required to have our internal control over financial reporting audited by our independent registered public accounting firm under Section 404 of the Sarbanes-Oxley Act of 2002. Reduced disclosure obligations regarding executive compensation in our periodic reports and proxy statements, and exemptions from the requirements of holding a non-binding advisory vote on executive compensation and any golden parachute payments. We may take advantage of these exemptions for up to 5 years or until we are no longer an emerging growth company, whichever is earlier. In addition, the Jobs Act provides that an emerging growth company can delay adopting new or revised accounting standards until those standards apply to private companies. We have elected to use the extended transmission period under the Jobs Act. Accordingly, our financial statements may not be comparable to the financial statements of the public companies that comply with such new or revised accounting standards. And again, you can read the link right over here on page 6 of their SEC filing. Lastly, here's an option strategy for potential buyers, as this is an option-centric channel. Given that Snowflake has risen rapidly in valuation from $12 billion to over $33 billion in just 6 months, it is prudent to question the value at the current price. As Warren Buffett, who has also invested in Snowflake through Berkshire Hathaway, famously said, "Price is what you pay, value is what you get." Using the cash secured put strategy, you can purchase Snowflake stock at a far lower price than its IPO price, potentially netting you a better cost basis than either Salesforce Ventures or the Oracle of Omaha himself. IPO stock has a 6-month lockup period, meaning that insiders can sell their stock 6 months from the IPO date, which would take us to March of 2021. Selling cash secured puts for March of 2021 would tie up margin, but likely provide for a far superior entry point in the stock. A happy medium for investors that want to buy stock right now and 200 or more shares would be to purchase 100 shares right now, assuming that you are eager to own the stock right now, and to sell one out of the money put option that expires in 6 months. This will have the effect of either allowing you to take assignment of a second lot of 100 shares at a value far below the current market price, or it will reduce your cost basis substantially due to the net credit received. Again, I'll post a second video on Sunday. Sorry about that, my dog is barking. Discussing what could possibly be done on the options chain once it's up and running. Thank you very much for watching. If you have any questions at all, email me or visit my website. Thanks a lot. Bye for now.